Energy Minister is also emerging from meetings with her G7 counterparts. Those talks come just days before the Carney government is set to unveil its long-awaited climate competitiveness strategy, which will be in Tuesday's federal budget. So after removing key pieces of Trudeau-era climate policy, what's the Liberals' new direction?
If you're wondering whether a middle power like Canada can truly be a leader, I hope you have your answer.
They say politics is the art of the possible. But what Mark Carney is trying to do right now feels a lot more like the art of the audacious. Canada is staring at a fork in the road: double down on fossil fuels and their short-term gains, or place a multi-billion-dollar bet on clean energy, industrial renewal, and a reimagined place in the global economy. This is not a policy tweak. This is a national rewiring. And today, we're going to unpack why Carney's climate competitiveness plan, the one landing inside the budget, could be Canada's biggest gamble in a generation. Imagine for a moment you're an investor, a factory owner, or a worker in a small town that depends on pipelines, refineries, or auto parts. The decisions Ottawa makes this week will ripple through your life for years. Carney has painted a bold picture: double non-US exports in a decade, attract $500 billion in investment, and build Canada into an energy and industrial hub that Asia and Europe want to partner with. That's the upside: fast growth, new ports, cleaner power, and an industrial base that's not hostage to a single market or a single set of political whims. But there's a flip side. The price tag is real. Generational investments mean bigger deficits, at least in the short run. And critics are already lining up with a predictable question: will Canadians get the growth necessary to pay back the spending? Bond markets, rating agencies, and households watching interest rates care about that answer. The federal finance team knows this, which is why Carney is selling not just a climate plan, but an economic pledge. Invest now to unlock long-term productivity and private capital. At the core of this bet is a tricky balancing act. On one hand, Canada still depends on oil and gas, huge reserves, strategic minerals, and energy infrastructure that powers global markets. On the other hand, the world is moving toward low-carbon supply chains and green tech, and buyers and capital are starting to demand decarbonized inputs. Carney's idea is to be pragmatic. Keep energy advantage while cleaning it up. Think small modular reactors, LNG exports with lower life cycle emissions, and massive port and rail upgrades so Canadian goods reach Asian markets fast. It's a plan designed both to please markets and to hedge political risk. That's where the phrase climate competitiveness is revealing. This isn't just about cutting emissions in the way activists demand. It's about making Canadian industry competitive in a world that prizes low-carbon footprints. Retrofit buildings, invest in public transit, and push industrial decarbonization where it counts. It's the difference between a moral pledge and a market strategy. Carney wants both. But politics complicates everything. This government is a minority government. It needs votes to pass a budget that expands spending. Some opposition figures and smaller parties, notably environmental advocates, are already warning, don't subsidize fossil fuels. Meanwhile, provinces that depend on resource revenues are skeptical of caps or constraints that look like job killers. The delicate dance will be convincing both groups that this plan protects jobs while moving Canada forward. That's a tall order. Technically, there are operational challenges too. Canada's promise to scale up small modular reactors, for example, is ambitious, and it relies on supply chains, enriched uranium availability, and international partnerships. The Darlington SMR project and plans to expand LNG exports all require long timelines and careful management. If Ottawa overpromises and underdelivers, the political blowback will come fast. Markets reward credibility, and credibility is earned by execution. Internationally, the stakes are high. Carney wants Canada to be the trusted middle power, a reliable partner for Asia, Europe, and the US that can supply secure energy, critical minerals, and clean technology. The $6.4 billion in Canadian projects unlocked involving 26 deals across 9 countries, is the first chapter of that story. Those are proof points, small but meaningful, that the world is willing to finance Canadian projects. If Ottawa can stitch together the CPTPP, ASEAN partnerships, and EU linkages as part of its strategy, Canada's economic architecture could transform in a decade. If not, the capital will flow elsewhere. Economists have a mixed view, and for good reason. Investment-led growth can pay off, but only if there's a clear path to productivity gains. Building ports and reactors is necessary, but it only creates a long-term return if businesses can sell the products, if supply chains are efficient, and if the workforce is skilled for the next wave of manufacturing. Carney's plan hinges on the assumption that private capital will follow public investment. That has happened in other countries, but it's not automatic. There's also a messaging challenge. Conservatives paint the plan as runaway spending that will blow up deficits. Environmentalists argue it doesn't go far enough on emissions caps. Industrialists worry about competitiveness if regulations are too strict. Carney must show these groups that he can thread the needle, that the plan is neither austerity nor handouts, but investment with measurable returns. Let's talk about timeline. Budgets and investments don't move instantly. Infrastructure, nuclear projects, and trade deals take years. That's why Carney's political calculus matters. Getting the budget approved and ensuring the political partners don't scupper long-term projects is as critical as the announced dollar amounts. The next 12 months will reveal whether this is a blueprint for durable change or an aspirational press release. So what happens next? Watch for 3 things. First, the exact fiscal numbers and targeted programs in the budget. Will they include industrial tax credits, direct infrastructure commitments, or conditional funding tied to emissions reductions? Second, the parliamentary negotiations. Can Carney secure the votes without major concessions that gut the plan? Third, the private sector reaction. Do pension funds, sovereign wealth funds, and Asian investors move decisively into Canadian projects? Or do they wait for execution proof? For Americans watching, there's a lesson here. Canada's pivot shows how smaller powers can use capital, credibility, and strategic assets to shape their destiny. It's a model that other middle powers will watch closely. Leverage your strengths, build redundancy, and attract partners rather than begging for permission. It's also a reminder that climate policy is changing from moral conversation to a competitive battleground where winners get investment and jobs. This moment is a test of leadership. If Carney pulls this off, Canada could enjoy a long runway of growth, energy exports that meet stricter global standards, and deeper ties across Asia and Europe. If he stumbles, the political fallout will be fierce and the economy could be left paying for projects that don't deliver. The risk is real, and so is the potential reward. Thanks for sticking with me through this one. We'll be watching the budget rollout, the political debates that follow, and the first investment commitments as proof points. For now, mark this moment as the turning point. A country choosing whether to double down on the past or bet on a new, cleaner, and more connected future. Outro. This is more than a policy choice. It's a bet on Canada's identity and its place in the 21st century economy. Whether it becomes a template for others or a cautionary tale depends on one thing: execution. Stay tuned, because the world is about to find out what Canada is willing to build and who will bet alongside it.